Elon Musk
That Elon Musk
just became the first
trillionaire.
world history.
Yesterday, while you were going to work, paying your bills, and trying to figure out how to afford groceries, a single company event made roughly 4,000 ordinary people into millionaires overnight. Engineers, software developers, operations, staff, even welders and cafeteria workers. None of them did anything special yesterday. They just showed up to a job they were already doing and woke up the next morning with life-changing money in their accounts.
Not a new company that enters space. We will never be a truly spacefaring civilization. And that's what SpaceX is all about, is to take the fiction out of science fiction.
This is not a hypothetical. This is what happened when SpaceX went public on June 12, 2026, in the largest IPO in human history. $75 billion raised at a $1.75 trillion valuation. NPR. And the part that should make every person watching this pay attention? The people who got rich were not the smartest or the most talented. They just happened to be on the right side of the most important financial line in the modern economy. The line between people who own pieces of companies and people who only sell their time to them. Let's break down exactly what happened and why this has everything to do with your money.
SpaceX launched onto Wall Street today with the largest initial public offering in history.
What just happened? To understand the magnitude of this, you have to understand the numbers. And the numbers are absurd. SpaceX listed on NASDAQ on June 12th, raising $75 billion at a $1.75 trillion valuation in what is now the largest IPO in financial history. For context, Saudi Aramco's 2019 offering raised $25.6 billion and held the previous record. SpaceX nearly tripled it. Saudi Aramco is a state-owned oil company that controls one of the largest oil reserves on Earth. A rocket and satellite internet company just blew past it by a factor of 3, and the demand was even more insane than the size. SpaceX's IPO attracted more than $250 billion in investor demand against a $75 billion offering, meaning for every dollar of stock offered, investors wanted to buy more than 3. Oversubscribed by over 3x. That's one of the strongest signals of market enthusiasm that exists.
It met my expectations, Nicole. This is a really exciting day. You're right. We have been anticipating this for a really long time. It's expected to start off this massive IPO parade as well, with a number of major names coming to the market within the next year.
The valuation puts SpaceX in a tier almost no company has reached. The 7th biggest company in the US, above Tesla, which sits at about $1.6 trillion. CNBC. A rocket company is now worth more than the most valuable car company in human history. But here's the detail. Almost no mainstream news coverage is talking about, and it's the most important one for understanding why this IPO is different. SpaceX allocated roughly 30% of the issue, around $22.5 billion, to retail investors. That's triple the industry norm. Most IPOs reserve 5 to 10% for regular people. SpaceX gave away 3 times that, which means an enormous amount of new stock just landed in the hands of regular investors, and an enormous amount of upside got handed to the early employees holding company equity. How 4,000 people became millionaires overnight. Let's talk about those 4,000 people. Polymarket estimates the offering created approximately 4,000 new millionaires, a group that stretches from senior executives all the way down to engineers, welders, and cafeteria workers who received equity over years of employment. The thing that should jump out at you is the range. Senior executives becoming millionaires from an IPO? That's not surprising. That's how the system is supposed to work. But cafeteria workers? Welders? Junior engineers who join the company straight out of school? How does that happen? The answer is one of the most important concepts in modern wealth building, and almost nobody teaches it in school.
But the initial pricing was $135. It soared past that, ended right above $160 per share for the day. So certainly much better than they originally expected. I mean, that
equity compensation. When you work at a public company or a late-stage startup, a portion of your pay often comes in the form of stock options or restricted stock units instead of just cash. You take a smaller paycheck than you might at a different company, but in exchange, you own a tiny sliver of the business itself. And if that business succeeds wildly, that tiny sliver can become worth more than your salary will ever be. For SpaceX, this practice was extreme. The company was famously hard to work at. brutal hours, cash compensation often below market rate compared to big tech, so it leaned heavily on equity to attract and retain people. A welder who took a job at SpaceX in 2017 instead of going to a conventional manufacturing employer was essentially making a bet, giving up short-term cash in exchange for owning a piece of a company that might one day be worth something. Most people took the safer cash job. The ones who took the SpaceX job and stuck around for nearly a decade just had that bet pay off in a way almost no other career decision could have produced. And look, I know what you're thinking. I don't work at SpaceX. I don't get stock options. What does this have to do with me? That's a fair question, but here's what you're missing. This exact same pattern has played out at dozens of companies, and it will keep playing out. The question isn't whether you happen to work at SpaceX. The question is, are you building your financial life on the labor side of this equation or the ownership side? Because one path leads to wealth, the other leads to 40 years of work and hoping your 401k is enough. This is the divide. The people who got rich yesterday were not richer or smarter than the people who didn't.
Yeah, SpaceX, guys, famous for its launches, but this has got to be the most successful launch yet. The largest IPO in history. The rocket and satellite company raised more than 100 billion Aussie dollars. Not bad for a company.
They were people who, at some point, made the decision to attach part of their financial future to ownership rather than just to labor. They got paid in the asset itself instead of just in dollars. And when the asset exploded, they exploded with it. Now, this is where the SpaceX story becomes your story, and this should genuinely change how you think about money. For most of human history, building wealth was simple. You worked, you earned a wage, you saved part of your wage, repeat for 40 years, retire with what you put away. That system worked when wages grew faster than asset prices, and the cost of basic life was reasonable relative to income. Neither of those things is true anymore. Wages have barely moved in real terms for decades. Asset prices, stocks, real estate, businesses, intellectual property have grown enormously. A welder who worked at a traditional fabrication shop for the last 10 years made a normal living and probably has a normal amount of retirement savings. A welder who took a job at SpaceX in 2017 and accepted stock as part of their compensation is now a multimillionaire. Same physical work, same showing up every day. The only difference? Which side of the labor vs ownership line they were on. And this is not unique to SpaceX. The same story has played out at almost every major company that's gone public in the last 25 years. Analysts say Anthropic and OpenAI are likely to list with valuations above $1 trillion each. Every one of those IPOs will create thousands more millionaires from people who happen to be employees with equity. Google made thousands of people rich in 2004. Facebook did it in 2012. Amazon, Microsoft, Tesla, Nvidia. Same pattern over and over. Here's the brutal truth. In the modern economy, your salary is almost never going to make you rich. What makes you rich is owning pieces of things that grow in value over time. And here's the harder truth. Most people watching this video already know that. They just haven't done anything about it. They consume financial content, nod their heads, and then go back to the same patterns. So the real question isn't whether you understand the lesson, it's whether you're actually going to do something with it. And that's exactly what this channel is built for. If you're done just watching and you're ready to start building, hit subscribe right now. Every week, I break down the strategies, the systems, and the income streams that actually move regular people from the labor side of the line to the ownership side. Not theory, actionable steps. So subscribe, and let's get into what you can actually do about this starting today. Why the IPO is also risky as hell. Now I have to be honest with you, because telling you to rush out and buy SpaceX stock would be irresponsible. There is a real chance that buying at this valuation is a terrible idea. There's also concentration risk. SpaceX is heavily tied to Elon Musk, a person who simultaneously runs Tesla, X, XAI, Neuralink, and the Boring Company. Anything that meaningfully affects Musk could send the stock down significantly. But here's what I want you to take away, because this is the part that actually matters. The lesson here isn't buy SpaceX stock. The lesson is that the wealth-building mechanism, owning pieces of things that grow, is available to you whether or not you ever touch a single share of SpaceX. Index funds, real estate, Building your own business. The specific vehicle matters less than which side of the equation you're standing on. So here's the one thing I want you to do this week. Open up your finances and ask yourself honestly, what percentage of your net worth is tied to ownership? Stocks, real estate, a business, anything that can grow independently of your labor? And what percentage is just cash you're slowly saving from a paycheck? If that ratio isn't moving toward ownership over time, nothing else you do matters. If this video changed how you think about money, even a little, drop a comment below. Tell me, are you on the labor side or the ownership side right now? And what's one step you're going to take this week to shift that balance? I read every comment. Then watch this next video right here. I break down exactly why the meta layoffs are about to become your problem and what the pattern of mass white-collar job cuts means for anyone still betting everything on a paycheck. That's the whole game. See you there.